I'll hang a recording of this on YouTube when we're done. I haven't had a chance to do the executive summary yet, so I'll just hang this video. All right, so this is the weekend trading report for December 5th, 2015. Market is in bullish normal conditions. On an annual basis, using weekly RSI 14, we're at 57 out of 100, in the middle of neutral. With shorter term 10-day NDX, we are at the higher end of neutral at 78 out of 100, almost on the border of overbought, excuse me. Looking at the market mosaic, we have price with respect to the 200-day moving average at 2.10%, which makes it white bullish. You can see we're like 0.1 above that sideways zone, so we've just entered back into bullish conditions, and we've actually been bouncing around in that area now for the whole week. ADX is weekly trending at 14.1, which means that there's room for a swing trade in either direction to be available. The risk index is the 30-period moving average of the VIX divided by the 10-period. The threshold between risk on and risk off is 1.0. The current reading is at 1.01. So we are into risk on conditions, meaning the riskier holdings are favored. When we take that score of 1.018 and compare it to the last 5,000 trading days, we find the average and the standard deviation. We can then compute the risk z-score, which is 0.13. And here you see a 90-day histogram of that indicator. And you can see we had a little dip down to -1 SD on the last increase in volatility, but now we've just tipped back into the long side in the green, and that's very favorable for swing trades right now. And the fact that we had such a small dip into the red is actually favorable too, compared to the big sell-off that we had previously. So this is favorable conditions for swing trading, certainly to the long side. Based on the ADX, there's room for a swing trade to really unfold. So I'm looking to add to positions on the long side. I'm willing to hold things overnight, knowing that there's still room to go. And the fact that we're near all-time highs and we're just now postured to begin a swing trade, to me, is a very favorable condition. You can see the blended monthly rebalancing holdings for ETF 13, 22, and 32. And the leaders as of Friday in each of those portfolios, no change. In ETF 2, the theoretical exposure is at 70%. The model itself is at 80%. So that's an improving area for swing trade implications as well. Quick look here at blended monthly rebalancing portfolio holdings for 13 and 32 ETFs. Again, about 2/3 of the members of ETF 13 are on a buy signal. Only emerging markets, Latin America, and treasuries are on cash. Everything else is in the buy, and we're dominated here by the U.S. technology and then large cap stocks. The same basic insights from ETF 32 as well. It's a little more granular of a look, but again, you got technology, the NASDAQ, consumer discretionary, consumer staples, and diamonds in the top 5 positions. So again, we're looking at strength flowing into the U.S. In ETF Max, this is looking at about 1,000 ETFs and ranking them by their blended monthly rebalancing, with additional insights from the 1 week and 1 month rates of return. Sugar is back up on top on a return to strength in China as well. You see the Golden Dragons and then the China technology. And again, I'm taking that as favorable for swing trading if we're starting to see strength going back into China. I see that as risk on types of conditions. I would also just notice down here XLK in position 25. That's the S&P 500's technology sector. You see that one, the semiconductor holder SMH, the Dow Jones technology. All of these bode very well for tech. And to me, large cap tech is still going to continue to lead the way. So I think we need to be looking at Cisco, Apple, Intel, Microsoft, Google, and Facebook again as the leaders in this space. I think the market's going to react favorably when the Fed raises rates this month. I think that'll be interpreted as a sign of strength. That was the indication from Friday anyway. Looking at the S&P 500 through that BMR lens, again, we want to take a look at Netflix, Hormel, Southwest Airlines, Verizon, Molson, NVIDIA. These are large cap leaders that have shown strength on every dimension of time, whether it's 1 week, 1 month, 3 months, and 6 months. So NVIDIA is certainly going to be one that's on our short list. So lots to choose from there. I'm encouraged by the fact that it's not just technology that's leading the way. You got Molson, Autodesk, Tico Energy, Hormel, Southwest Airlines. So all of those suggest it's more than just technology in the lead right now. Next up is the market health check. So the vertical blue lines are 10, 20, and 30 days worth of look back. And then you see the thick lines are 30 and 60. The horizontal purple line is that all-time high, which has been resistance for the past month. What I take to be very encouraging is this idea here that when you look at the dragon, we had a dragon swing low, and now at this little pullback, we've got a much higher low. And so if we can get through this move here at 212, then I really think it's up and away. So a nice positive move here, an orderly pullback to the bottom of the river, a nice rebound, a 2-day pullback, and then again a nice rebound Friday. So this looks very favorable to me. You can see that we dipped down on the Williams percent R very briefly into oversold conditions. The last 2 times that has happened, there's been a nice buying opportunity triggered. So I see this as favorable. The jaws of PPO are basically flat, and that says that there's room for a swing trade to go. So all it really has to get through is 212, and then it's free and clear to the upside, and that's why I'm cautiously optimistic here. The final thing that I would note is the slope of the 30-period regression line. I'm highlighting that here in yellow. That looks like that little sine wave. And you can see that it has pulled back to this dotted line in the middle, which is a 0 on the slope, horizontal on the slope. And that basically gives you this this black channel is the 30-period regression line channel, and that has gone completely flat. But it's got a nice bounce from Friday, and it's had an orderly pullback. And if we can resume this move here, this will start to hook back up again, and that will be a very favorable sign. The fact that it dipped very low back in September, made a nice bounce in November, and then held into positive territory here in December, and then taken off. I take that as a very favorable sign for longer term trend strength. Okay. Next up, we're looking at the ETF2, the regional report. We have only 3 symbols on a cash position, 7 on a buy position based on price with respect to the 4-month moving average, and so that puts the market, the regional health check at 70% invested, 30% cash, which is an improvement over the 50-50 from last week. The S&P is at strength of 70, which is better than the EFA, the globals, at 65. So right now the U.S. is definitely favored. Among the U.S. indexes, it's technology at 74, large caps at 70, then a tie between mid caps and small caps. So right now, U.S. tech and U.S. large caps are definitely favored, with the 2 strongest sectors being SPY and U.S. tech, and then the 2 weakest sectors continue to be Latin America and emerging markets. Inside the sector spiders, the strength is in, again, technology, staples, and consumer discretionary, and that's very favorable for the long side as well. So a lot of good things to choose from. Now the world market model. First, to start with the U.S. market, everything is above average, with strength in the diamonds, the Dow at 72, and large cap growth technology at 74. In the Asian countries, Asia and Asia less Japan are both above average. China is exceptionally strong. Weakness, but it has been improving in Latin America and emerging markets, Canada and Mexico and Brazil. There used to be a lot of red in that area. Now that they're up into the yellow is actually a favorable sign. Some strength starting to return to Europe as well. The technology is strong in both the U.S. and globals, and in staples and discretionary. Those are business sector phenomenons, so I think there's still a lot of robust strength left in there. So we want to concentrate in those sectors in this week ahead. We're going to go right to the daily report now. No signals in the overreaction or the channeling systems. You can see how the volatility has departed the scene here, and the trendiness of the market has decayed. The bears are weakening. I think the bulls are about ready to take over. So I think of that as favorable. I like looking at the 10-day max pains. I'm seeing Disney, Caterpillar, United Tech, especially interesting, along with Hewlett Packard on the short list as an opportunity to buy strength on sale. Dow 30 tactical. No patterns per se. We do have 4 that are favorable on the auto framer. That's going to be Disney, Caterpillar, United Tech, and ExxonMobil. Some good fraud quality numbers starting to reemerge here with American Express and Caterpillar. Caterpillar, to me, looks like a very interesting play. I do like the strength in Microsoft and Apple from Friday. That's where along with JP Morgan, that's where the strength leadership was. And so those 2 are going to be on my short list, Microsoft and Apple, for continuation plays on Monday. So let's keep an eye on them. If the market is up and these things are doing better than the market, then that's basically a no-brainer for me. I will get back aboard those intraday as a high priority. Basically the same picture in ETF 30. Very few patterns in play, although we do have some 551Ws here with Japan, industrials, the Russell mid caps, and the Russell small caps. So IWM is going to be attractive. We've got half a dozen that test out well on the auto framer: Brazil, Latin America, oil, energy, and emerging markets. We've only got two favorable frog quality numbers, and that's going to be energy and materials. And energy has a 5.62 on the RSI2, which means it's like a 2-day washout pattern, and so there could be some short-term rebound in that one as well. In the auto framer, some good-looking trades framing up here in Latin America, Brazil, Disney, emerging markets, and energy. I also like Caterpillar. Looking at the regression line fractal framework. The symbols on the top shelf in the green, these are the ones that are the most numbers of ATRs below their own RL270. So that's going to be an opportunity to get to buy value on sale as it tries to get back to its long-term fair value. And that, to me, the two that really stand out are Disney and Apple. And then the ones on the bottom shelf in the red, these are the relative strength leaders. So you get Microsoft and Intel and McDonald's. I like all those. I really like DuPont as well. That's 11 1/4 ATRs above its long-term fair value. So that has been a real leader in this turnaround in the last couple months as money has started to go back into basic materials and the business cycle. So I kind of like DuPont. Time permitting, we'll take a look at that chart. Not much to choose from here on the daily squeeze. And you saw this on the health check. We've had this nice move here in the slope of the RL30, which I think is finding support here in the positive. This move on Friday was very reassuring and has lent some momentum to the polynomial regression line. But I like the fact that it was able to hold support going into the weekend when there was plenty of news that was not looking favorable. I like the higher lows in the percent stretch above the 200. All that looks favorable as well. And I think we've got an opportunity to go back and test the stretch back here. Again, everything points to me that if we can get above 212, then there's been a nice base established here in the market. Just going to flash through the other charts for your reference. None that really jump out at me right now. We'll take a look here at the z-scores of the slopes of the regression lines. I like that the 90 in the red here has rolled up and is now back over the long-term average and facing up. You can see that nice move in the 30 is finding support. And then the 10, each little pullback in the 10 has gotten progressively stronger. And so all of that points to the upside as well. The fact that we were able to find support here at the edge of the river. And now, again, all we got it doesn't really feel like it, but we are at all-time highs here. And if we can break above this 212 level, you know, it's really up and away. I really feel positive about this. So I'll have to take that into account all week. All right, that's everything I want to look at on the daily and weekend report. Let's see if we can't take a look at a couple charts. While we're waiting for those charts to load, I just I sent out a note earlier this week about potential for a swing trade online workshop, a combination of swing trade workshop with 1 or 2 lessons a month with homework and case studies that's to be bundled with some monthly coaching. I want to try to test that that approach to doing the workshops. So if you're interested in that package, I've got 3 people signed up so far. I can handle, I think, 12. Just send me an email if you're interested in doing an online version of swing trading. In March, we have a chance to do a weekend pilot workshop on simulation trading using Forex Tester 2 as our simulation platform. Alex McKinnon and Kim Anderson have done some great work with that platform and have found a way to get regular price data from ETFs and large caps into that. It gives us the full range of back testing and looks like a really nice package. So I'm going to do a, if there's enough interest, if we can get 8 or 10 people interested in doing that on a weekend in March, I'm looking at the weekend of March 18th through the 20th. That would basically be fly in Friday night for a meet and greet, and then work really hard for about a day and a half on doing case studies using Forex Tester 2 under supervision. I think Alex is going to come in for that one if we have enough people, and I'm going to try to see if I can get Kim Anderson to come too. And what we'll do is we're going to practice on both intraday and swing trading using Forex Tester, and master how we can use that as a training tool. And so that would be March, and then in June I'm looking at the annual research weekend and live trading week to do that in the usual way. I'm preparing thumb drives with, and so here's the last opportunity too, is all the video presentations and slide decks from the June Kansas City workshop, which I thought were excellent. I'm making thumb drives with all those videos now for people that were not able to attend, and so let me know if you're interested in those. I'm also adding to that package the about 30 or 35 mini trading lessons that we did that week from the live trading. So I think some insights in the trades as we were working them. I think there's a lot of value in that package. I should send out a note with all this stuff to remind people. But if you're interested in that, I've got some attractive holiday pricings on it, and just drop me a note. All right, so I want to take a look at the daily charts here. Let's take a look at some key winners. Let's start with Apple. I really like Apple here. I like the fact that we had a swing low in the dragon here and a swing low here, and you notice the spike in both cases that came out was it's been a series of higher lows, and it closed very well on Friday above the dragon at the RL 270, and really all it's got to do is get above 121, and then it's off we go. So I really think Apple is still a buy right here, and again, certainly by the time we get above 123, that will be seen as very favorable. So Apple I rate as a buy and very attractive. Let's take a look at Caterpillar. Caterpillar is resting on its RL 270. It's finding support down here at the RL 90 and the 270. It's right at the edge of the river, and so if we just plot the far side of the river is the next logical break. I'm willing to buy a continuation of momentum. I think this price level down here around 68.5 or 69 is going to be seen as a support level, and so I'm targeting 73. The dragon hump there at 74, which is also the far side of the floodplain. And if we get above 76, that's going to be very favorable as well. So I really like the value play in Caterpillar right now. All right, let's take a look at the Dow, or no, let's look at DuPont. This is what real strength looks like. I want to go back a little bit and show what that regression line fractal framework can do for us. So the main idea here is that the RL270, which is this purple line, oops, no, let me highlight that a little bit. This purple line is long-term fair value for institutions. And the RL10, which is the dark blue line, is essentially smoothed price. And during this downward period, all the way till the end of October, you can see that the traders were pushing the short-term fair value or short-term price away from the long-term fair value, which was decaying. But then right here at the end, at the start of October, really, you get this change, this sea change in market conditions. The river reverses and flows up. There's some RLCOs happening inside here, and now this thing went from 47 to 67, which is darn near a 40% move in DuPont, and now it's finding its new support level here, well above the RL270. This is 11 ATRs above the long-term fair value. And so a couple ways to look at this. One of them is we could say, well, it's overextended and has now found its new long-term fair value. If that's the case, this price will just continue to kind of decay and hang around here while the RL270 comes up and meets it somewhere around 64. That would sort of, in my view, be the fair value. Or if we get some favorable market action now and let the S&P get above 212 and have a favorable response to the raising of interest rates, then I think it would be normal to see strength leaders like DuPont have a nice rebound, find support here, and then take off for another leg. And so this leg here, which is about $10, would put a price target up around 77 to 80 in DuPont. So I'm looking at DuPont to continue to be a leader. Oh, I'm sorry. Dagnabbit. Dennis asked me, will I be doing a Van Tharp training this spring? There's a potential we may do something in April. If I can get people interested in March and that works out well, then Van and I talked about doing one of those simulation trading workshops in Raleigh in April. And I think there's one in May that we're going to do, which is the another live trade, if I remember. Yeah, so let me go back. I'm sorry, I had the screen on pause while the chart was loading. I forgot. Let me redo Apple here real quick. Yeah, so Apple, very briefly, the RL270 has come down, but you've seen that the RL10, which used to be a far distance, has now kind of oscillated and come back to the RL270. So we've got this rising triangle, and you see support and the river basically coming up. So Apple right now is at fair value right in this cluster, and so now that means to me that a move to 124 is well within reach as just a retest of previous high. I like the fact that the dragon has given us a swing low, a higher low, and everything, and the river is facing up. So again, I take this as a move to 124 is well within reach. And then Caterpillar I looked at. Caterpillar is another one that's also resting on fair value at RL270, and it's at the RL90. And this support level here around $69 to me looks pretty solid. And that's certainly a level up from the sell-off. And if you take a look at this price level right here, 75 is calling. So I see really a two-stage trade in Caterpillar here. One of them is it finds support at 69 and goes up to retest 75. And if it can get through 75, then it's up to 80 on the next level. So that's reasonable. And then a breakdown below 69 takes it back down to test 65. So we have Caterpillar in a nice critical state right here with a favorable reward to risk ratio in both directions, and we can let market price action put us into whichever direction is appropriate. So that's one where we follow no directional bias, although I do like the upside. I'm also prepared to take that one to the downside as well. Now for another one that's showing more strength in that basic material sector. So this is a cousin of Caterpillar, and that's DuPont. And what I want to show in DuPont here is, again, the idea of the regression line fractal framework. During all of this sell-off, you can see that the blue line, which is the RL10, has been pulling away from the RL270, and so you had the traders pulling price down, and then here in the beginning of October, all of that changed, and a strong support level was put in, and then you get something like a 40% move from 47 to 67, and now you can see how we crossed. You get that the 10-270 crossover here, and now kind of locked into this position around 67. I really think 80 is within reach. If we get any kind of favorable response to the Fed's likely raising of interest rates, then it would stand to reason that this support level here will be favorable, and then it's building support for a move up to 80, and that would be the market rewarding the early leaders. So I think that's a positive sign. Looking at DIA, DIA looks very favorable to me as well. It has pulled back into this fair value support level here around 177, but I do like the swing lows are improving all the way up. The RL270, which is that purple line, has stopped its downward move and is starting to roll back up, so I take that as a very favorable sign. And with the strength in the U.S. large caps, the diamond should continue to do pretty well. So I see that as a long-term favorable sign for continued strength in the U.S. Disney is interesting here on a swing basis. We've got strong support down here at 112. Tactical test of the high here at 120. So that's a $6 move with a couple bucks of risk involved. If this fails at 112, then really it's going to come down to 108. But I really think Disney is likely to respond pretty well out of this base and come up in stage one, test 120. And then if it gets above 120, then I think it's 125 and 130 for the next, for 3 legs up. Disney's looking like it's recovered from this horrible August sell-off and is looking very good. And there's a chance to buy it on sale. You got this support level, this support level. It's pulled back to the bottom of the river here, and you can buy the mouse on sale. Let's look at Brazil. All those vertical and horizontal lines just tells you on the intraday I've been trading the heck out of Brazil. It's one of my favorite intraday trades, as well as a swing trade. I like Brazil here. It's in the throughout the entire August sell-off, August through October, it failed. It's got one strong move up a sideways period where there has been some buying interest and a failure to fail below 2280 where it's currently resting. So I see 2580 as being within reach. If it fails here, it's back down to 20, but I really think 25 is within sight, and if it gets above 25, the next place where there is resistance is up here around 28.5 or 29. So there's a wall of worry that Brazil can climb. I would like to see the swing trade work there, but really it's been such a good day trade that while it's in this weakened condition, it continues to be a really good intraday trade. And any swing trade that I'm into here is going to be built off of money that's made intraday. So a lot to like in Brazil. Real strength in Facebook here. You can see it's been one of the tech leaders. The August sell-off took it down here over to 70. It's had a 50% move up to 108, and you can see that it's hardly given back anything in this zone here. So support around 104, and then if it gets above 110, it's there's nothing to hold it back. So that's going to be an important tell for us. So that one looks very favorable. As much as I hate Zuckerberg, I think you gotta like the stock. It's a must-own for growth mutual funds going forward. I don't see how you avoid owning it. Strength is manifesting in China as it builds its little base of support in here around 37.5. This has been an orderly pullback. It's very near its long-term fair value, and the fact that it's had a couple rising lows already, to me, looks favorable. I'm seeing a target up around 40, and then the next, if it clears 40, back up to 45. So I see China as a global leader going forward. Let's look at Intel. Intel also is one you can see that I've been trading a lot with all those horizontal lines. And standing back and looking from a distance, we've got these higher lows. That rising dragon, you can see how he's moving, and it's right here at that all-time high again. And all it's got to do is break out above 35, and Intel is long and strong. That's going to be an early leader again for me. If it shows any kind of strength, I'm in it. The Russell small caps, I think, are an opportunity to buy on sale. We're looking at resistance levels here, higher lows, and if it continues to hold here, gets a second-day momentum, I'm ready to buy a new high. Then it has to get through 120. If it can get through 120, then it's free and clear. That will be an early indication if speculative money on the growth side's coming back in. We've already seen the large caps leading the way. If some of that enthusiasm rotates over into the small caps, then that will foretell a strong move by the speculators and the short-term traders. And then that would cause me to shift away from large caps and look to exploit some of that energy in the small caps. Let's do a couple more here. Microsoft was on my list. Yeah, beauty. Really nice looking chart here. It's held that support level from that big gap up, pushing that all-time high. Microsoft, you got to reward that with strength. On any show of strength, you got to pile on Microsoft. Netflix, same condition. That's broken out of its this consolidation zone here between 100 and 115. and we've got a, so that's all support, and now it's done nothing but take off. It's cleared 125. So any new momentum, new daily highs, you can get into Netflix. Let's see if there's anything else we'll look at here. XLK, the technology sector. One of the things I like about the sector spiders is they're much more orderly than the individual companies. And so if it's too hard to choose between Intel, say Microsoft, Facebook, you can see XLK, the sell-off down here, and then a nice strong rebound, orderly pullback, and now it's already had an all-time high right here. So any new momentum in technology, XLK is long and strong. So that's really favorable too. So I actually talking myself into a really positive outlook for the potential of this little Santa Claus rally here. I'm really liking this. There's been a lot of really good work done the last couple, 2-3 weeks in the chat room. There's some tremendous intraday trading going on, lots of good framing. Yasik and Gil are doing a great job of summarizing those weekend reports. When they post the one from last week, I'm gonna start adding a voiceover narrative to that, so there will be a second video to be uploaded at the YouTube channel. I'll post that link both to this recording and to the review of their summary of last week's work in the trading room. I'm going to hang all that in the chat room as well. So that's everything I wanted to cover. A good 40 minutes so far. So unless there are any specific questions, I'm gonna call it there and then get a little bit more work done. And this video should be available in about an hour at YouTube. Oh, okay, Dennis, looking forward to it. Yeah, Martin, I know you've still got some credits here on various workshops, so take a look at that note that I just sent around, and I can be really flexible with you to make sure you get what it is that you want on the, I think the swing trading one could be very interesting, especially when it's paired with the monthly coaching. I think that's going to be a long-term keeper. And then certainly if we do the thing in March, and then and failing that, we will certainly absolutely do the research weekend in Kansas, so we can do that. Okay, yeah. So just send me a note about what you want to do, and I'll work with you on your credits. Okay, everybody, take good care, and we'll see you in the chat room. Keep your risk measured and your powder dry. Commit to continuous improvement. Take care of one another and your families. Get the most out of each day. Life is precious and fragile, and so let's take advantage of our gifts. So take good care.